Today I have selected two questions. One is relating to accounting equation and the other one is relating to petty cash. Okay, so let's move on to the first question, the question number 4. Can you see the screen? You can, no? Okay. So the first question is James Ford, a sole trader, repairs and sells used motor vehicles. So what is his business? He repairs and sells used motor vehicles. Okay. So this is the business. On 31st March 2012, his books of accounts contain the following balances after the preparation of his final accounts. Okay. On 31st March 2012, the following accounts balances are extracted. First one, equipment net book value £5,000, motor vehicles net book value 12,500, stock of vehicles 45,000. So what is his main business activity? Repairs and sells. He repairs and sells motor vehicles. So therefore, he has stock of vehicles 45,000, stock of material 2,250, debtors 560, creditors 430, and capital 64,880. State the accounting equation. That is the first question. What is the second question? Using the figures above, state the accounting equation for James Ford's business. Using the figures above, state the accounting equation for James Ford's business. James is considering creating a provision for doubtful debts for £100. Explain the effect that this would have on the accounting equation. Okay. Now, before I move on to this question, okay, let me ask you a question. What is the accounting equation? Accounting equation. So what is the main accounting equation? Which is assets equals equity plus liabilities. Is that right? Is that correct? Yes. Assets equals equity plus liability. What does it mean? What does it mean? Assets equals equity plus liabilities. What does it mean? Can anyone tell me? Yeah, so this is the equation. Okay. So in other words, what we can say is, okay, what company owns should be equal to what company owes. Is that right? Can you see the screen? Okay. So what company owns should be equal to what company owes. Okay. So how this equation is formed? How this is formed? This equation is formed based on business entity concept, right? Entity concept. What is business entity concept? What is business entity concept? Business entity concept says business and the owner are two separate entities. two separate entities. Okay, is that right? Is that right? Okay, so business and the owners are two separate entities. Okay, so business and the owners are two separate entities. For example, let's say now you take a business. Let's say this is your business. Okay, and this is the owner. Can you see now? Okay, so this is the business. And this is the owner. Okay, so under what do you call business entity concept, business and the owners are treated as two separate entities. So therefore, any transaction between the owner and the business, okay, like personal transactions, is personal transactions are not recorded, right? Not recorded in the business's book. Okay, only business related transactions are recorded. Is that right? Yes. Okay, only business related transactions are recorded in the business. Okay, now let's say now the owner, our equation is assets equals equity plus liabilities. Okay, now let's assume the owner, he invest $10,000. Okay, what does it happen to your accounting equation? So this is the accounting equation, right? This is your accounting equation. What does it happen? What is the impact? Okay, when the owner invests money, okay, business receives cash, no? Business receives cash. Okay, so therefore the business will have cash 10,000. And on the other hand, what happens? The business has to pay back. Business has to pay back to its owners. Okay, so this is what I said. Business receives cash, business owns cash, and business has to pay back to its owners. Business owes cash to its owners. So the business, if it owes cash to its owners, it's known as equity. Okay, so therefore business receives cash 10,000, business has to pay back to its owners 10,000. So therefore your assets equals equity, the first equation, right? Always your assets should be equal to equity. So owner invested 10,000, business receives cash 10,000, it increases the assets. In the meantime, at the same time, business has to pay back to its owners. So therefore, there's a liability, an obligation. So equity also increases. So what it owns, what it owes. Is that right? Okay. Now let's say supposing the business obtain a bank loan, 5,000 dollars. What happens? Here also the business receives cash, no? Receives cash. How much? 5,000. And at the same time, what happens? Business has to pay back. Business has to pay back to the bank. Business has to pay back to the bank. So therefore, there is an obligation. There is an obligation or there is a liability. There is a liability towards the business. Okay. So therefore, business receives cash. So therefore, cash will increase by 5,000 and the liability will increase by 5,000. Is that clear? Okay. The cash increases, company owns cash and company owes cash to the bank. So therefore, the bank liability increases by 5,000. So if you take the overall, now company received 10,000 from its owners, 10,000, and also company received 5,000 from its bank. So therefore, what is the total cash? 10,000 plus 5,000. So therefore, the total cash is how much? 15,000, which is equal to equity is how much? 10,000 dollars plus the bank loan, the liability. The liability is equal to 5,000. So at a given point, what happens? The company owns cash 15,000 and company owes 15,000. Is that clear? Okay. So 15,000, here 10,000 plus 5,000. What company owns, what company owes. It should be equal. Is that clear? Okay. So now based on this, can you answer this question? Can you answer this question? State the accounting equation. So what is the accounting equation? So state the accounting equation. So what is the equation? Assets equals equity plus liability. So this is the accounting equation. Now, using the figures above, state the accounting equation for James Ford's business. Now, this is the basic accounting equation. Now, you are given set of information, figures. Based on this, you need to establish the accounting equation. How do you do that? Okay. So, first of all, you identify the assets. Equipment is an asset. Okay, it should fall under asset. Motor vehicles net book value. So this is also an asset. Then stock of vehicles. Vehicles also an asset. Stock of materials is also an asset. Debtors means amount receivable from the customers. So therefore, so that is also treated as an asset. Then the creditors. So what is creditor? Creditor is a liability. This is a liability. Then the capital means the owner's equity. Okay, so these are the figures that we have identified. Now let's establish the accounting equation based on these figures. Now, okay, now let's take down the formula first. Assets equals equity plus liability. Okay, under assets what we can take down is equipment. Equipment is equal to 5,000. Then we have motor vehicles 12,500. Then stock of vehicles, stocks we have 45,000. Then stock of materials, material stock, how much? 2,250. And finally, debtors is equal to 560. Then the creditors under liabilities, we can put it on this side. Creditors balance is 430 plus the capital under equity is amounting to 64,880. Now when you add up this, so what will be the total? Equals equity plus the liabilities. Okay, so here 64,880 and here 430. So when you take the total, so what will be the total? 5,000 plus 12,500 plus 45,000 plus 2,250 plus 560, which is equal to 65,310, which is when you add up these two will be equal to 65,310. Okay, so this is the answer for part B. Part A, you have to mention the accounting equation. We have to state the accounting equation. Part 2, based on the figures given, you identify the accounting equation. Okay, so that is the part 3. And part C, James is considering creating a provision for doubtful debts, £100. Explain the effect that this would have on the accounting equation. So what will be the impact on this particular transaction on the accounting equation? So James is considering creating a provision for doubtful debts. So this we have already created. Assets equals equity plus liabilities. Okay, we have figured out how these figures will be reflected in the accounting equation. Now the part C says James is considering creating a provision for doubtful debts. So there is a debtor balance of how much? There is a debtor balance of 560. Out of this 560, James is expecting that £100 would not be collected. There is a doubtful. This is doubtful. Out of 560, he has a doubt whether these £100 worth of customers will pay their balance. Okay? Yes, a doubtful. So therefore, he made a provision. He made a provision. So provision means he's charging this 100 as an expense. Okay? So once you charge this as an expense, what happens? What happens? The equity owner's profit will reduce. Equity owner's profit will reduce. Okay? As a result of that, now once you make a provision of £100, so that will be treated as an expense. So once you charge as an expense, okay, the equity, the profit will reduce. Equity owner's profit will reduce. So therefore, the accounting equation will be your debtor balance 560 will reduce by 100, then the equity balance also will reduce by 100. Okay, so therefore, what is the correct answer for this? James is considering creating a provision for doubtful debts of £100. Explain the effect that this would have on the accounting equation. So accounting equation, what will happen? Your debtor balance will reduce by £100. Your debtor balance, sorry, this will reduce by 100, and also your capital will reduce by 100. Okay, why? You are making a provision. So since you are making a provision, debtor balance will reduce by 100. Since this is an expense, expense will lead to reduction in profit. Profit belongs to the equity owners. So therefore, equity owners capital will reduce by 100. So this is the impact. So what you can say, debtor balance will reduce by 100, the equity balance will reduce by 100. So this is the answer for part C. Is that clear?